Welcome to Dinar Community, your trusted source for the latest developments on the Iraqi Dinar, IQD, Vietnamese Dong, VND, and global currency news. If you're following international financial shifts, currency reform, or looking for investment insights that could potentially change your financial outlook, you're in the right place. We go beyond the headlines to uncover the deeper implications behind today's most talked about financial moves. In today's segment, we're covering a monumental update that's sending shockwaves through the global economic landscape. The Central Bank of Iraq has just taken a dramatic step by anchoring the dinar to an incredible $4.04, far surpassing expectations across financial circles. Meanwhile, the Vietnamese dong has made an equally surprising leap, now valued at over $2, climbing to $2.06 and still gaining traction. What's causing these dramatic currency shifts? How will this impact your holdings, investments, or future financial planning? These aren't just numbers, they're indicators of seismic shifts in the world's monetary dynamics. Let's unpack what's really happening, what's driving this transformation, and how you can navigate these powerful economic changes. In a decision that has stunned international markets, Iraq's central bank has fixed the IQD at $4.04 per dollar. This isn't a small change. It's a long-anticipated overhaul reflecting years of groundwork in economic reform, international cooperation, and bold domestic policymaking. Just months ago, the dinar struggled at much lower levels, heavily influenced by the outdated dollar auction system. This new rate marks a decisive move toward full financial independence. Analysts interpret this revaluation as the realization of Iraq's long-term monetary reform agenda. It marks a clear shift away from foreign currency dependencies and toward a confident, sovereign economic identity. For Iraqi citizens, this could mean a rise in real purchasing power. For the global financial world, it signals a new era in which Iraq asserts itself as a stable and competitive economic force. We're already seeing increased Forex activity and investor optimism around the dinar. While Iraq grabs headlines, Vietnam is quietly experiencing its own breakthrough. The dong's recent appreciation past $2, specifically reaching $2.06, is sparking international attention. This surge is powered by robust economic fundamentals, effective fiscal policies, and a strategic push to attract global investment. Vietnam's expanding infrastructure, booming manufacturing sector, and growing trade alliances are transforming it into a regional economic giant. GDP forecasts for Vietnam in 2025 range from 6.5% to 8%, reinforcing the dong's value surge and the nation's status as a resilient emerging market. For long-term VND holders, the currency's performance validates years of patience and strategic foresight. As Vietnam strengthens its role in sectors like electronics, agriculture, and textiles, the dong's upward trajectory appears far from over. The $4.04 valuation of the dinar didn't happen overnight. It's the product of strategic decisions, starting with Iraq abolishing the long-criticized dollar auction system. This old system, often marred by corruption and inefficiency, has been replaced with a streamlined structure that routes foreign currency transactions through trusted financial institutions like J.P. Morgan and Citibank. This move introduces accountability and builds trust in Iraq's financial system. Additionally, Iraq has issued new lower denomination banknotes, a sign of currency normalization and confidence in the dinar. These smaller bills make everyday transactions more practical and reflect a maturing economy. Iraq is also making great strides toward compliance with international financial regulations, aligning itself with the expectations of global markets and investors. These reforms, along with surging demand for dinar on Forex platforms, show the world that Iraq is serious about establishing itself as a modern, investable economy. Now let's look at the bigger picture. What do these new rates, $4.04 for the IQD and $2.06 for the VND, mean for citizens and investors? For Iraq, the strengthened dinar empowers consumers, boosts national pride, and reduces the need for foreign currency in trade. It signals Iraq's entry into a new economic chapter, one that invites more foreign direct investment, especially in key sectors like energy, tech, and agriculture. Vietnam's currency rally showcases its economic resilience and appeal as a major exporter. A strong dong increases consumer and investor confidence, reinforcing the country's position as a critical player in the global economy. Currency holders who've waited years for this moment may finally be seeing the payoff. But beyond personal gain, These shifts represent broader national transformations, long overdue progress after years of instability and economic restructuring. Prominent voices in the currency world are weighing in. Analyst Mark C. has said that Iraq's move aligns closely with IMF frameworks and sets the stage for deeper global integration. Frank 26, known for his detailed IQD commentary, believes this is a well-timed unveiling of Iraq's true financial capacity. Militian suggests Iraq's bold action could inspire similar currency reform in other nations with undervalued currencies. Together, these views reinforce a growing consensus that we are witnessing a rare, historic realignment of the global financial order. Still, challenges remain. Iraq must now shift from oil dependency to a diversified economy, developing industries like tourism, farming, and light manufacturing. Achieving this transition will require sustained policy reforms and partnerships. Additionally, regional instability and ongoing security concerns remain significant risks. Vietnam, while thriving, must also carefully manage its currency's momentum to prevent inflation and overheating. Both countries are entering uncharted waters, and missteps could reverse their progress. So, what should currency holders do now? If you're holding IQD or VND, this is a pivotal moment. Stay informed through trusted financial sources, and don't make hasty moves. Market conditions can shift rapidly. Consider seeking advice from licensed financial professionals with international market expertise before making conversion or reinvestment decisions. And don't forget the value of diversification. Spreading investments across various sectors and assets can offer better protection in volatile times. Ultimately, what's happening in Iraq and Vietnam is more than a financial event. It's part of a broader trend where emerging markets are challenging the dominance of traditional economic powers. As more countries pursue reforms and seek control over their economic futures, the global monetary system will become increasingly dynamic and inclusive. We may be witnessing the birth of a new era, one where economic power is distributed more evenly, and nations once overlooked are stepping into the spotlight. Looking ahead, the coming days and weeks will be critical. Will Iraq maintain this bold new rate? Will Vietnam's central bank introduce new measures to manage its soaring currency? These developments will shape global markets and impact investors everywhere. Stay tuned, because what comes next could redefine global finance. Make sure to subscribe, leave your comments below, and share this video with others tracking these changes. This is Dinar Community. Thanks for watching, and we'll see you in the next update.